Hey guys, welcome to this week's stock market recap. I'm Robert Montes with Nexus Wealth Management. Today we're going to be diving into what helped the market, what hurt the market, and how it affects your everyday life for the week of October 6th through 10th, 2025. It was a soft week overall for the markets with a bit of a pause after recent highs. We saw the S&P dip 2.4%, the Dow down 2.7%, and the Nasdaq being down 2.5%. Now, despite this dip, year-to-date gains are still very strong, showing the market's underlying resilience that supports our long-term financial stability. As far as positive factors last week, there were three things that really stood out. First, we got exciting AI investment headlines like AMD's deal to supply chips to OpenAI, which boosted tech sentiment. This kind of innovation means more job opportunities in growing sectors. Second, strong expectations for a rate cut from the Federal Reserve led to people being excited about that, as this makes borrowing easier. So think about things like a home purchase or a car upgrade. They're more affordable when rates do come down. Third, we saw outperformance in rate-sensitive areas like small-cap stocks and sectors such as utilities and health services, which highlights the economy's resilience. Now, there were a few things on the flip side that we want to pay attention to. Here are three of them. First, we saw renewed U.S.-China trade tensions, including tariff threats and a canceled leadership meeting between our two presidents. While not ideal, companies are adapting and encourages diversification that could strengthen long-term stability for our imports and exports. Second, the ongoing government shutdown, which is now in its second week, is delaying some economic data. This is a short-term hiccup affecting federal workers, but markets are largely looking past it as families are experiencing a sort of shutdown fatigue, as this has happened so frequently in years past. Third, there have been some uncertainties about AI and elevated valuations, which has led to some pullbacks, specifically what we saw on Friday. Now, guys, as someone who is also juggling work, family, and just life in general, here are a couple of things that I think you should be taking away as far as key takeaways. First, with rate cuts on the horizon, it's a great time to both strategically plan for big purchases or things you've maybe been putting off. So think of a new house, a new car. Now's the time to start getting your finances in order because they're most likely going to be more affordable. Second, this dip reminds us to stay diversified. If you haven't reviewed your holdings or had a professional provide a second set of eyes on your accounts, now would be a great time to do so. Guys, whether you're a busy professional, you're a mom, possibly juggling career, family, and finances, or if you simply want a fresh perspective on your wealth strategy for you or your company's 401k plan, drop me a message. I'd love to connect. Thank you guys so much for watching. Please don't hesitate to hit that like button. Consider subscribing. Talk to you guys next week. Take care. GoPro, stop recording.